Hello everyone, welcome back to Energy World, where we break down the biggest developments in oil, gas, power and renewables and what they actually mean for you, for government, investors and industry players. This week, we bring you stories about Aramco's $21 billion dividend bounty, Ondo State, Nigeria $50 billion refinery complex dream. Is this Nigeria's next Dangote? The oil balancing act by OPEC Plus versus Asia's oil slowdown, the new onshore oil discovery in Libya near the Algerian border. We bring you the story on COP30 and Nigeria's $3 billion climate finance push, and a new report that oil demand will keep rising through 2032 as energy transition slows. Let's begin with Aramco's $21 billion dividend, a lesson for Nigeria's NNPC and the energy world. This week, the big headline is from Saudi Arabia, where oil giant Aramco has just announced a $21 billion dividend for the last quarter, Q3 2025. This is another massive payout, and it is a reminder of how strategic energy management can shape a nation's economy. It is also a very strong showing for Aramco, who remains one of the most profitable companies in the world, and its result this quarter reinforces that position. The company continues to generate strong cash flows, even in periods of oil price volatility. But the story isn't just about numbers. It's about discipline, transparency, efficiency, and strong management. Now, beyond oil, Aramco is investing heavily in gas. By 2030, it sees a growth in its gas production capacity and has revised its target upwards from about 60% to 80% above the 2021 production levels. This signals that the future of energy won't be a sudden switch, but a managed transition from oil. With Aramco's results, one would naturally think of the potential of Nigeria's NNPC Limited. Aramco just declared $21 billion in dividends. NNPC on its part announced its first ever profit in 2023 financial year, about 3.3 trillion naira and a 2.1 trillion dividend to the government. NNPC has been publishing a monthly statement of its operating results. In April 2025, NNPC reported 748 billion naira profit after tax. In May, profits then rose to 1.05 trillion and declined to 905 billion in June. This further declined in September 2025 to 216 billion. This is partly due to reduced oil production in the month of September, occasioned by the union's 3-day strike action. NNPC is making progress, but there's still a long road ahead. Like Aramco, there are lessons to be learned in governance, operational discipline, and transparency. Aramco's financials are audited, published, and trusted globally. That trust attracts investment and keeps Saudi Arabia's fiscal system stable, even when oil prices slow. What NNPC can learn? Now, a few lessons. First is on governance. Transparency builds credibility around the world. Investors, partners, and even citizens, they want to see where every naira goes. Second is efficiency. Aramco manages cost and maximizes output. For NNPC, cutting costs, reducing oil theft, and efficient project management is very important. Third is diversification. Aramco earns money beyond crude. Its refining, petrochemicals, and gas business create multiple income streams. NNPC can replicate these by deepening its play in refining, LNG, and other gas commercialization projects. When NNPC thrives, Nigeria benefits from energy access to foreign exchange stability. A stronger, more transparent NNPC means less debt pressure and a more resilient economy. Now, what is the road ahead? Under the Petroleum Industry Act, NNPC is preparing for a public listing, an IPO, that will open it up to investors. This intention is expressed in Section 53(5)(8) of the Petroleum Industry Act, setting the process for the immediate commercialization and privatization of not only its operations, but also a possible future private ownership of shares in NNPC Limited. Now, this will be a major milestone, but the success of it will depend on NNPC's credibility, transparency, audited books, consistent profits, and a clear growth strategy. If those reforms are sustained, NNPC could attract global partners and reposition Nigeria as a serious player in the global energy space, not just as a crude exporter, but as a fully integrated energy company. And that's the real lesson here. Aramco's numbers aren't just headlines, they are a benchmark of what's possible when a national oil company runs efficiently and strategically. So, as Aramco celebrates its $21 billion quarterly dividend, there's a lot to be learned because the success of NNPC is not just about profit, it's about national stability, investor confidence, and improvements in the lives of ordinary Nigerians if funds are well managed. With the right reforms, transparency, and leadership, NNPC can tell a similar success story in the years ahead. Next, we talk about Nigeria's Ondo State $50 billion refinery complex dream. Is this the next Dangote? The Ondo State government has finalized a landmark $50 billion refinery and free trade zone project. It's not only a refinery, it comes with a complete industrial park. It is aimed at transforming the state into a major oil and gas hub. The agreement covers the construction of a 500,000 barrel per day refinery and the development of the 1,471 hectare Sunshine Free Trade Zone in the Laje local government area. The project is designed to include wider infrastructure, logistics, and community development components, making it one of the largest downstream investments in Africa. If the state manages to pull this through, this could become a game changer for the region, boosting local refining capacity, job creation, foreign reserves, and will bolster Nigeria's dominance in the continent's oil refining landscape. The project gained major momentum when BINL secured an international funding partnership led by Nefex Holdings of Canada that brings its extensive expertise from operations spanning the Middle East, Europe, and North America. Other members of the Sunshine Infrastructure joint venture include MJK Investment Finance, China Arbor, and Honeywell OUP. The state governor, Lucky Aiyedatiwa, while signing the agreement, described the project as a strategic step towards sustainable industrialization in the state and in the country. He assured the investors of conducive business environment, the protection of their investments, and collaboration to ensure that the project delivers tangible results for the people. The Sunshine Free Trade Zone will host the refinery, petrochemical plants, gas processing facilities, and export terminals. This means the zone will attract foreign direct investments, manufacturing industries, and export-oriented businesses, benefiting, of course, from tax incentives, streamlined trade policies, and international partnerships. For ordinary Nigerians, the benefits are far-reaching. Why? The refinery is expected to reduce dependence on imported fuel to stabilize domestic supply and support energy security. It would also create thousands of direct and indirect jobs, boost local content participation, and stimulate small businesses within the host communities. In the long term, increased refining capacity could help reduce fuel prices, strengthen the naira, and ensure more revenue flows into the national economy. My take on this proposed project is that it signals the willingness of the private sector to take a bet on Nigeria and support its drive towards industrialization and serve the African markets. For decades, African countries have exported crude oil while importing petrol, diesel, and aviation fuel. It is a paradox that has drained foreign reserves and exposed local economies to the vagaries of global price shocks. With increasing boosts in local refining capacity, Africa is gradually moving towards energy self-sufficiency, aiming to supply its own markets and export refined products across the continent. And next, we talk about the Oil Balancing Act, OPEC Plus versus Asia's slowdown. Oil prices remain relatively flat as traders weighed OPEC Plus production moves against weaker economic data from Asia, the world's largest energy-consuming region. As of Monday, 3rd November, Brent crude traded at $64.53 per barrel, while US WTI, West Texas Intermediate, stood at $60.67, both hovering near their 2-month lows. Analysts say this reflects a market struggling to find balance between rising supply and slower global demand. The global oil market is holding steady this week as traders weigh OPEC Plus production adjustments against weaker economic data from Asia, the world's largest energy-consuming region. OPEC Plus plans a modest 137,000 barrels per day output increase for December 2025, a figure consistent with the previous 2 months. However, OPEC will pause further production increases in the first quarter of 2026 to prevent a supply glut, signaling a cautious stance amid market uncertainties and rising global supply fears. Expect prices to be around $60, while the International Energy Agency warns of a potential 4 million barrels per day surplus next year due to stronger US, Brazil, and Guyana output and slower Chinese demand. Analysts expect price to stay between $60 and $65 per barrel as the market balances OPEC strategy, geopolitical risk in Russia, and the world shift towards cleaner energy. And next, we bring you the story from Libya, where there is a new onshore oil discovery near the Algerian border, boosting Africa's energy prospects. Libya's National Oil Corporation has announced a major onshore oil discovery in the Ghadames Basin near the Libyan-Algerian border. The new well, operated by the Arabian Gulf Oil Company, is producing about 4,675 barrels of crude oil per day and 2 million cubic feet of gas. This comes just a week after another discovery in the Site Basin, where Austrian energy firm OMV found over 4,200 barrels per day of new crude, signaling a renewed wave of exploration success in Libya. What does this mean for Libya and Africa? These back-to-back discoveries would strengthen Libya's position as a key African oil producer, boost government revenue, and create jobs as production expands. For Africa, it underscores the continent's growing relevance in global energy supply, especially as investment returns to North Africa's oil heartlands. Analysts say the discoveries could attract more foreign investment, enhancing regional energy security and supporting economic recovery across Libya and its neighbors. Next, we talk about COP30 and Nigeria's $3 billion climate finance push and whether this is realistic. As the world prepares for the United Nations Climate Change Conference known as COP30, African countries, including Nigeria, are stepping up their climate action plans. COP stands for Conference of the Parties, referring to the nearly 200 countries that have signed up to the original UN Climate Agreement of 1992 in Paris. The conference officially opens from Monday 10th November to 21st November 2025. Why is this important? And what is the Paris Agreement? COP30 is holding at a crucial time when global climate emissions targets face severe constraints. Recall that from Paris 2015, nearly 200 countries agreed they will try to limit global temperature rises to 1.5 degrees centigrade above pre-industrial levels and to keep them well below 2 degrees centigrade. Strong science-based evidence suggests severe negative effects if temperature rises to about 2 degrees rather than at 1.5 degrees. Even though the adoption of renewable energy is on the rise globally, climate plans are falling short of the 1.5 degrees target. Analysts say the move could reshape Nigeria's approach to climate change and directly impact millions of lives. From flooding in the south to desertification in the north, the effects of climate change in Nigeria are already severe, affecting farmlands, livelihoods, and food security. The story is the same across African countries that collectively contribute less pollutants but is experiencing most difficult consequences of emissions from Western countries. At the pre-conference climate dialogue, Vice President Kashim Shettima of Nigeria announced that the country plans to mobilize at least $3 billion every year in climate finance to fund clean energy and resilience projects. Why does this matter? Climate finance refers to the funding of projects and technologies that help countries cut emissions and adapt to changing weather conditions. For Nigeria, this new target means more investment in solar energy, reforestation, waste-to-energy projects, and flood control systems. The plan aligns with Nigeria's energy transition plan and a national roadmap that aims to achieve net zero carbon emissions by 2060. while creating millions of green jobs. $3 billion is a lot. Where will the money come from? Now, according to the plan, the money will be raised through a mix of public and private financing, including partnerships with international climate funds, such as the Green Climate Fund, bilateral agreements with developed nations, domestic green bonds, and private sector participation. What are the benefits for Nigerians? For ordinary Nigerians, the benefits would be transformative. Farmers may gain access to irrigation and drought-resistant crops. Communities could see new solar mini-grids powering homes and schools. Youths and entrepreneurs may benefit from training and employment in renewable energy and green innovation. The Vice President says further that this is not just about saving the planet, it's about protecting lives, jobs, and Nigeria's economic future. If implemented effectively, this funding can lift millions out of poverty. Experts say achieving the $3 billion target will require strong governance, transparency, and collaboration between government agencies, investors, and local communities. At COP30, Nigeria plans to present its National Progress Report and outline how it intends to attract and utilize climate finance. We wait to see if COP30 will make a significant difference because of the influence of the US president, who has branded climate change as the greatest con job ever perpetrated on the world, pledging to roll back green initiatives put in place by his predecessors. The US and China are also not expected to send senior government delegates to the conference. And finally, for this week, we talk about oil demand that will keep rising through 2032 as energy transition slows. Global oil demand is projected to keep rising until 2032 as the world's energy transition faces major delays. According to a new report by Wood Mackenzie, this indicates that the world may be off track in meeting its Paris Agreement goals due to strong consumption from developing economies and slower progress in renewable investments, keeping fossil fuels in high demand. Industry analysts say oil use will grow by about 3 million barrels per day over the next 7 years, driven by transportation, petrochemicals, and industrial expansion in Asia and Africa. Experts warn that while clean energy investments are increasing, they are not yet sufficient to replace oil and gas at the pace required to meet global climate goals. For Africa, this trend could bring fresh economic opportunities from new exploration projects in Nigeria, Libya, and Namibia to rising export revenues that can fund infrastructure and social development. However, energy leaders stress the need for balanced growth, urging nations to leverage oil revenues while accelerating investments in renewables to ensure a sustainable future. And that's it for this week's update. What we are seeing across the energy world right now is that global energy story remains very dynamic and deeply interconnected. Aramco's $21 billion payout shows what's possible when a national oil company runs efficiently. And Ondo State's $50 billion refinery project, that's a bold reminder that even subnational players can dream big and maybe redefine Nigeria's industrial future. OPEC Plus is still balancing supply as Asia's demand cools. Libya's new discovery adds to Africa's upstream story, and Nigeria's $3 billion COP30 climate finance goal brings the transition conversation closer to home. At the end of the day, energy is just not about oil or renewables. It's about direction, discipline, and what we do with the opportunities ahead. I am Babatunde. Thanks for watching. If you found this update useful, don't forget to like, share, and subscribe, and I'll see you in the next one. Thank you.